Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Stephen Cowell with Lizzie Burden, and we're joined by our reporter Chloe Mele. Chloe, good morning.
Good morning.
Let's start with defence stocks. All trading lower, it appears, this morning. This following the latest developments in the Ukraine talks and the possibility of some progress there. You've been looking at Rheinmetall in particular.
Yeah, absolutely. Rheinmetall down more than 4% this morning, but we are seeing that weakness across all of those names like Hensoldt, Totalis, BAE this morning, because as you say, there is now progress on those Ukraine peace talks, and Trump has said that the end to the war is getting closer than ever. And Zelensky has said that he'd reached an agreement with the US to make security guarantees legally binding. So now all of that has been really pushing those defense shares lower, and now the focus is on the response from Putin. So the Russian deputy foreign minister told ABC News that he is very much confident that the war is coming to an end. But there are still things to iron out, and he insisted that the territorial demands to remain unchanged from Russia's point of view. And so that is really going to be a sticking point going forward for the negotiations, because Ukraine said that there had been no decisions on Ukraine giving up any land, but Trump has said that they would have to. So there are still things to be figured out, but the prospect of that peace deal is coming closer, much closer than perhaps previous efforts. And therefore, we are seeing that weakness across the defense industry this morning.
I mean, you do wonder whether this is an overreaction, Chloe. If Russia isn't busy with Ukraine, the Baltics and the Nordics are going to have to rearm, surely. And if Putin concludes that the West rolled over, then you've got other places in Europe that will be giving defence industry companies business. But we'll park that for a moment and look elsewhere to UBS. Moves upwards for them this morning. Tell us more about their, quote, highly attractive proposition, as one analyst put it.
Yeah, absolutely. So Bank of America analysts upgraded UBS to a buy rating, and they said that the Swiss bank will be able to grow earnings per share at the fastest pace of any bank globally. So that's why it's such a highly attractive proposition from UBS. And it also added the bank to its Europe One list, which is a list of the top European stock ideas for 2026. And analysts have said that the bank will be benefiting from the wealth markets in Asia, but the big boost really is coming from the fact that there is there's now a way out of the political standoff that we've seen between UBS and the Swiss government. So the government have been trying to tighten rules around the banking sector, and that would have threatened UBS with $26 billion in new capital requirements. But the latest that we had on this is that last week, a group of Swiss lawmakers proposed watering down those capital demands that the country wanted to impose on UBS, and that sent the shares much higher last Friday. And now, according to Bank of America analysts, this really is paving the way for compromise, and that offers a way out for UBS, and therefore is really making that stock, as we said, highly attractive. So that's really the main thing.
And then finally today, Chloe, we've heard the news that the EU is moving to abandon its combustion engine ban. How are car makers doing after that news?
Pretty well. It's a big win for them. So as you said, we got confirmation of something that we had talked about yesterday. So the EU expected to abandon that ban on those combustion engine cars, and that was due to take effect in 2035. So that essentially leaves car makers a little bit more time to transition to emission-free vehicles, and that removes obviously some of that regulatory burden, those regulatory costs that would have come with that. There will still be some attempts at hitting some climate targets. So car makers will need to compensate for that additional pollution by using low carbon or renewable fuels or locally produced green steel. And the tailpipe emissions will need to be reduced by 90% by the middle of the next decade. And the previous goal was of 100%, but I guess it's still pretty high. But this is overall win for car makers that had been really lobbying against those rules, and it's also a signal that there is this wider pullback from green policies that that got started in the US, but that we can see now kind of spilling over into Europe as well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.